This is traded the day for August 28th, 2014. I'm doing this the day before because we are really in a holiday period right now, and you have to take this into account if you plan to trade the next 2 days. Markets are very thin. It perhaps is thin except for the end of the year, being the only time that it's probably thinner. You also have month end, and I'm not an expert on month end, but I do know there's always talk if the stock market does well, that usually leads to dollar selling on hedges, but I don't know how it works when you rebalance bonds against stocks. Just be aware that there could be some dollar selling on Friday. So that's where we stand. The other focus and the key focus this week, and I said all week, is going to be on Eurozone inflation on Friday. I think German CPI comes out tomorrow. Today on Thursday. So you got to keep that in mind as also, because market is very, very sensitive to any hints that would tip the hand towards QE for the ECB. I still think it's a long shot for this coming meeting. I don't think it's something that's going to happen. So there could be some disappointment next week, but it's, Draghi's going to leave it on the table so it keeps the euro under pressure. And the goal here, don't underestimate this. They want a weaker euro. They want it below 130. So how it gets there is another story. We could see some hiccups along the way, but for now, the focus is on a very, very thin market. Now, if we look at the charts here, and as we talked about, right here is the gap that everyone's looking at. I have it to 130. 132.21, which is last Friday's low. Others have it to the close on Friday at 132.44. Now 132, pardon the writing, is traded 3 days in a row. As you know, I watch these pivotal big figures. If the big figure trades at 132 again tomorrow, long goes on, we're setting up for a directional move, so you got to be prepared. Otherwise, my bias remains down the euro, but I'm going to be cautious on Thursday. If you want to use an indicator of momentum, use the 100-hour moving average. Now comes in at 132.12, so it's almost within the market. It's been trading below that level since August. Looks around August 18th, so it's almost 10 days. Almost 2 weeks we've been below this 100-hour moving average. So that's an indicator of momentum you should watch. Overall, bias is going to be to sell euro for me into next week. But I think in this case, I'm going to play it close to the vest overnight, be square overnight. I think what I'll do is I'll wait until Friday to see if we get some ridiculous level, maybe a stop hunt. You saw what happened in Canada today. So for the next 2 days, probably going to wear a bunker. If I trade, it'll be a little hit and run. I'll watch 132 to set my tone. I'll watch German inflation tomorrow, more important. Eurozone inflation. As I said, I saw one estimate for 0.2 from, I think it was Paribas. Other ones have 0.4 unchanged. And the market is going to be watching expectations of the following week, but I think QE is still a long shot, so maybe we'll get better levels to sell the euro. But rest assured, as long as we stay below 132.94, the euro is going to remain a sell. I'll cover that in the week in the newsletter, our monthly newsletter comes out over the week. Otherwise, that's it for now. We have our trading guide at the top of this video. I suggest you read it. It really covers some great insights. So that's it for now. Jay Meisler signing off. I think a bunker mentality the next 2 days, and my trade of the day is to play close to the vest and look for some extreme level to sell euro.